Rural Funds Management, as responsible entity and manager of the Rural Funds Group, was pleased to present the audited financial accounts of the group on the 27th of August. Highlights of the result include a net profit before income tax of $9.4 million, adjusted funds from operations of $11 million, in line with our previous guidance, a net asset value of $1.15 per unit, and on an adjusted basis, $1.22 per unit, gearing of 35.1%, and importantly for our investors, forecast to increase a growth in distributions by 4% to 8.93 cents per unit. RFF owns assets in three primary agricultural sectors: almond orchards, poultry infrastructure and vineyards, as well as water entitlements to support those assets. Each year, RFF's assets are independently valued by a licensed independent valuer. This year, the valuation resulted in an uplift of around $11 million for RFF's assets. The main reason for that uplift was an increase in the value of our almond orchards, which increased by $7,000 per hectare to $56,000 per hectare. Our poultry infrastructure had a decrement of around $3 million, which is consistent with management's approach to decrease the value of those assets or depreciate them as they age. Our vineyard assets increased by $1.4 million. This was higher than management's expectation and as a result of stronger market in this area. Also as a result of a grafting program that has seen more area planted to Shiraz. In the introduction to this presentation, I use the term adjusted NAV. I'd like to spend a moment to explain that term to you. NAV, or net asset value, is a well-known term within the investment community and refers to the asset backing of each unit. RFF owns significant water entitlements. Accounting standards and asset guidelines insist that those water entitlements be valued at cost. In order to fully inform investors about the true value of their investment, RFF issues an adjusted NAV. Included in that adjusted NAV is the water entitlements as valued by the independent valuer. So to summarise, net asset value at 30 June 15 was $1.15 a unit with water entitlements at cost. Adjusted net asset value was $1.22 with water entitlements valued according to the independent valuer. The manager was pleased to update its distribution guidance for RFF as part of the annual accounts. Previous guidance was at 3% and it's now grown to 4%. RFF investors can expect 2.23 cents per quarter commencing 30 September 2015. This provides a yield of around 8.1% on a trading price of $1.10. The increase in distribution is supported by indexation clauses and rent review clauses in our leases. The RFF price increased 19% during FY15, starting off the year at 92 cents per unit and finishing the year at $1.09 per unit. This saw a closing of the gap between our trading price and the net asset value. In our view, a significant contributor to this increase in trading price was the consistency of the yield that RFF paid out during the year. With over 8% yield, it became a very important income stream for our investors. Another factor that we consider assisted the increase in price was the market awareness of our weighted average lease expiry. It increased over the past year with the signing of a lease with Olam Orchards Australia Limited for a 22-year lease to develop and operate an almond orchard on RFF's Tocabil property. During the year, the manager of Rural Funds Group entered into a lease with Olam Australia to develop and operate an almond orchard on RFF's Tocabil property. To date, Olam have planted over 400 hectares of almond trees and RFF has expensed nearly $10 million in acquisition and development costs. Next calendar year, Olam will plant a further 200 hectares and RFF intends to expense around $13 million during the FY16 year. All development is on track. Management remains focused on the compliance to the farming, financial and operational aspects of each of RFF's lease. This is important to understand the financial performance and growth plans for RFF's lessees. That way we can partner together in the future. Our aim is to grow the fund. Clearly, RFF is small when compared to many of its listed peers. However, it's not growth for growth's sake, but a specific sort of growth that we're looking for. Growth that will provide an increase in distribution to RFF's investors.